The carbon tax cleared a final hurdle today, and business will have to learn to live with it from July. 500 of Australia's largest polluters will pay $23 a tonne for their carbon emissions, but they're expected to pass most of that cost on. The lack of bipartisan support, though, has business leaders worried. They're questioning whether the tax will last and whether it will lead to greater investment in renewable energy. Emily Stewart reports.
The carbon price has been a divisive issue for years, and the battle continued down to the wire in the Senate.
A carbon tax was a bad idea then. It still remains a bad idea today.
It is a reform where we are asking this generation of Australians to do something today in order to reduce the risk for future generations.
While the government says the carbon price will provide certainty for investment, business leaders have told a Carbon Expo in Melbourne the lack of bipartisan support is creating a great deal of uncertainty.
In the longer term, before we make certain investments, that there is some bipartisan agreement on what the policy is going forward.
The opposition claims it will repeal the tax at the next election, but there were doubts this would happen.
Once you've put $1,000 in a bunch of people's pocket to help them with higher energy prices, boy, that's hard to take back out again.
For the coalition, if they were to repeal it, the statements that have been made that energy prices will go down, because when I look at all of the fundamentals, energy prices are going to continue to rise, and regardless of whether they would have, with the rate they've gone up, if energy prices continue to rise, I see that as being very difficult.
The tax is also expected to move more investment towards renewable energy, but the chief executive of Delta Electricity, Greg Everett, feels the fixed carbon price is still not enough incentive.
The assets that we're talking about have lives of 25, 30, 40, 50 years, not 3 or 4 years. And so $23 is not representative necessarily of the future. You could make an investment and find that it's stranded. And so people, I think, will not invest on the $23 fixed price now. They'll wait and see where the markets start to trend into the future. And therefore, in this near term, we will probably continue to have the energy mix that we have now.
The scheme relies on companies buying permits to emit carbon pollution. But Mr Everett says Delta won't be purchasing large numbers of permits in advance.
The current arrangements are that you have to pay on purchase. And for us, and I think for large buyers, that means that you won't be running out and buying large amounts of permits now because of the working capital impost.
In 2015, the fixed-price carbon tax will be replaced by an emissions trading scheme, a move some business leaders believe will work much better.
It's the one where you get the most economic growth and the most carbon productivity at the same time.
I absolutely agree with everyone on the panel. The quicker we get to a trading scheme, the better. So we can expose ourselves. We're all part of international businesses.
But carbon prices in Europe have crashed to 4-year lows, ranging between $9 and $13 a tonne. The falls are down to recent economic unrest. The panel says it's a market working as it should, and in the long term, the Australian carbon price will fall in line with international figures.